Yo, listen, oi. Run that again, I'm shelling them. Flow galactic, cool man Bellingham. Man, I got love in Krakow and Birmingham. The gal love me, but I keep hurting them. I'm a twat, got the chat. Bit of this and bit of that. I'll run up in New York with a Polish lens. By the time we're done, it won't be your flat, like flat. Tie up, jet, fly up. Man, marking a tart in a raid, Maguire. Hardest skis in the game, Dan Dyer. Got loads of heat like a shit hair dryer. And again, I'm a big game player. Fly your sister out to Marbella. Treat her nice to a vampire, yellow and a Chardonnay and a pack of Stella. We make it bang like shotgun. Bottles on tap, let me pop one. We make it bang like shotgun. And if you want lyrics, I got some. We make it bang like shotgun. Bottles on tap, let me pop one. We make it bang like shotgun. And if you want lyrics, I got some. We make it bang like shotgun. Best dressed in a rave like got one. Now I ain't got a wife, but I want one. Pink sweets and I dance like pop one. Aye, this one loud is kicking. That one's fine like parking tickets. Shatter up like what's your digits? Off the goose, forgot my lyrics. I got some. We make it bang like shotgun. Best dressed in a rave like got one. Now I ain't got a wife, but I want.
Hello ladies and gentlemen, welcome, it's your boy Tony here. And I want to welcome you all to this new live stream. I'm going to be doing this regularly. Very excited for how far we've come, for all of you that are supporting the channel and subscribing and following and sharing. You know, there's a lot to learn in this industry, and it can be a better day. Today's Friday. We had a lot of volatility. What makes this day very special, it's the end of April. Now we are currently in May. It's the 1st of May 2026, right? We are beginning the second month of the second quarter. And we just had FOMC a while ago. Now, away from all the news, I want to talk today about something that is very important, you know, understanding what traders don't actually know. And I'm talking about not just a typical beginner or a retail trader, but in general. Even advanced people, some of them get some of these concepts very wrong. And we are going to be dialoguing and breaking down some of these things. So I want to welcome you all right? Understand, guys, today's theme is traders don't know this, okay? Traders really don't know this. The information, the mechanics, and the psychology, the industry keeps quiet. So, understand that there's a version of the financial markets that the education industry teaches you. That is one thing. And there is a version that actually exists, right? What do I mean by that? I'm going to break this down, and I'm not trying to be a conspiracy theory here, all right? I want to show you what is on the other side, right? Having been through these institutions and working hand in hand closely on these desks and these trading desks, liquidity management, exchanges, and brokerage companies, and so forth. So I want to welcome you all once again. The comment section will be available, so you can always put in your question there. All right. So we're going to start with what many retail traders are using. I want to draw your attention to Forex Factory. Number one, whole narrative on what we understand by fundamental news, right? You see, I would like to let you all know that institutional institutional participants, they do not use economic data or economic calendars as a warning. They're simply using this as a planning document. They build positions in 2 to even 4, some 6, depending on the strategy. Weeks, we're talking about weeks and months. Now, before any event that you see on this calendar, right? Any event here, particularly bigger bigger news, bigger movers. We're talking about things like the FOMC. We're looking at CPI and other things, right? They have already planned this. So the event itself is simply a confirmation and acceleration of their move. So, in other words, what I'm trying to say is that these economic news releases should not be taken as signals. They're not reactive, they're just pre-positioned. Now, for the live chart, when you see a high impact event on your calendar, right? Usually on Forex Factory, as you can see, it's red. What do? Do you stand aside? Do you trade it? Do you reduce the size? Right? Drop your answer in the chart. So what I want you to do this, because I'm going through this very quickly, I want you to use this as an application, all right? Simply as an application that you are positioning yourself. It should not be some kind of game. Like, you shouldn't look at this as, all right, the numbers come in and I will buy or I will sell. All right? 4 weeks before any central bank decision, you got to start building your thesis. The event is simply the trigger, guys. So regarding this, let's move on to maybe a chart here. Let me just open what usually retail traders are looking at. So for purposes of this live stream, let's look at the gold chart. All right. So before me, I have a gold chart. And let's say we have marked all the levels that we wanna mark. You've marked, say, the highs, right? The highs on the 15-minute. Let's say you're an intraday trader, right? You've marked your support zones, and you've done your highs and your lows and everything like that, right? And you are looking for the liquidity pools. We've already mentioned this. Like, every time you have drawn a support or a resistance line on any chart, guys, you have been looking at the wrong thing. And I mentioned this so many times in my my videos. Support and resistance are real. The reason they are real is completely different from what most retail traders are believing. Now, understand, above any previous high, for example, here we have 4647, right? This is a previous high. We have another previous high right above Asian and New York and London, etc. Right? Right above that, we have stop losses from short sellers, right? Buyers as well, who have been trying to short at levels with stops just above it, right? Now, we have a cluster of pending breakout buyers, remember, at these areas, from traders waiting for confirmation. So, that is a liquidity pool. It's not a wall. A wall where we have different trials to break through or retests, okay? So it's not a wall, it's not a pool, it's just a concentration of orders at a price the market will be drawn to, right? Not repelled to. So it's simply like a collecting event. And this is what you got to know, all right? You have to ask questions like, has price ever swept a level you were watching and immediately reversed? So these zones here that I talk about, right? These zones have to be, if you start to look at them from lower time frames, right? Understand that these are just not support and resistance, right? You don't want to confuse the two. You want to ensure that you are doing the right analysis. Okay? So, stop asking, will this level hold? Start asking, what does that level have to do with the institution or participant? What orders are sitting at this level, and which direction does the institution need price to go to collect them? So, the level is just a destination. It's not a wall. So stop thinking in terms of support and resistance. We always want to know what exactly the institutions are doing. So you gotta always zoom out and see where is the next area, right? Could it be this? Could it be this? Could it be this? Right? You gotta think in terms of the macros. Now, today is a Friday, right? And today we have lots of holidays according to the the open source economic calendar, right? What does that mean? We have some bank holidays, and most of the price action around the end of the week has sort of slowed down. Now, there are many factors that lead to that. The institutional desk manager looks at the calendar. It's a Friday. They gotta reduce exposure. Not because, say, the trend is over, right? Or FOMC is done. But because they are managing weekend gap risk. And I've talked a lot about that. Anything can go wrong on the weekend. We see a lot of invasions happen. We see a lot of geopolitical issues happening, and all that can cause a lot of imbalances and, of course, risk. So on Friday afternoons from 2 p.m. London onward, please do not initiate any new directional positions, right? All you got to do is get your mark here. You got to look at London time, right? I'm talking about 2 o'clock London time, right? 2 o'clock London time. You have not to be in any position, and you should never have any directional bias. So do not close existing ones based on afternoon action alone, right? Watch the Sunday open gap instead. Gaps against Friday closes will equate to statistical tendency to fill in the first 1 or 2 days of the following week. So that gap is your Monday setup. Look at this in terms of Monday, right? Monday. Always zoom out, and just to avoid any damage on your portfolio, right? So that is in regard to Friday afternoons, right? Using it as a mechanism. Now, let us talk about. I want to talk about some of the hidden mechanics. What the market doesn't show you, right? Say, for example, the candle shows you something that occurred, right? It's a historical. Let's get any candle here. For example, we have a 30-minute candle. Any. It could be a bullish one, right? We have this candle right here. All right. Now, the candle does not show you what happened during that period. The candle is showing you what you've survived, guys. In a 5-minute candle, in this case, we're looking at Bitcoin. In this 30-minute candle right here, just that 30-minute candle, right? Hundreds of individuals' transactions, right, occurred at hundreds of price levels. All that was compressed into 4 data points. The candle is a summary, it's not the output. So once you start understanding that this is not the output, it's just a summary of what happened in between that entire area, right? It changes the way you think about it. Because look, the retail trader looks at the candle and thinks they understand what happened. They see a hammer or a morning star or whatever pattern that you've thought about. They make a decision based on the shape of the summary without even ever asking, what process produces summary? A wick at the bottom created by buyers stepping in, looks very identical to one created by large resting orders right above, rather absorbing selling pressure. So you have completely different implications of what comes next. All right, ladies and gentlemen, understand that all this, right, all that is just an expression of the numbers, and we always mention what institutions are doing, how they are trading, what numbers are they looking at, what is the order flow like, right? So start to think in that context. When you see a significant candle, a big one, ask the process question, right? You should think in a process context, not a pattern context. you got to ask questions like, what had to happen during that candle to produce that shape? Was it absorption? Was it aggressive entries? Was it liquidity sweeping? If the answer is always unclear, you got to step aside. All right? Just step aside. Now, there's something else that I keep mentioning, and that is the court numbers, right? So we have court numbers, the commitment of traders report, and we can get that pretty much anywhere. Let's see. I think we have it over here. So we got the court report. Let's see. Let's look for the court report. Let's look for the court report. Where are you, court report? There you have it. Now, once you start to open these court reports, right, commitment of trader reports, they're free, guys. I'm just using a website that sort of makes it a little bit visually, clear. They're free, they're government published, and you should never ignore them, right? You can use a bar chart or futures or whatever. Understand, every Friday at 3:30 p.m. Eastern, the CFTC publishes a document that shows you exactly, right, where the largest, the most regulated, and the most consequential participants in the futures market are positioned, either long or short, right? In what size and in every major market. So, we've mentioned before, go check out the videos. I break down how you should actually start to implement the commitment of trader report in your daily trading, in your daily retail trading. There are lots of nuances that you got to see, right? It's not just looking at these numbers, right? You have to have some correlation bias as well. Look at all these pairs. Concentrate on a few of them. You shouldn't be trading 10, 15 pairs, right? Understand, commercial traders who are the hedgers are the smart money in the report. As simple as that. They will sell when expensive, they will buy when it's cheap. When they are at multi-hour extreme net long, while large speculators are simultaneously at a multi-hour extreme net short on the same instrument. So, that is the highest conviction positioning signal available to any market participant, retail or institutional. If you've ever looked at this court report, please type yes or no in the comments. Alright? So I need you guys to look at these things, not as just decorative, right? Not just looking at these numbers, but you have to at least journal them, put them in an Excel sheet. You know, if that is very hard for you, start to track them using some of these open source websites. Just have that as a confirmation layer. And for more of the details on how I break down this, please go check out some of the other videos, right? This is just a summary of how best you can look at the mechanics and the hidden psychology and information and how to use this in your daily trading. So next time you pull up your instrument, please look at commercial positioning, look at speculator positioning, check whether they are historical extremes, check whether they are opposite sides. You know, all that information is what institutional macro funds pay significant money to model. Fine, let's move forward. Now, we have the TIPS yield explaining gold, right? Not the chart. Okay, so what you want to do is you want to go and check out the 10-year TIPS yield, right? 10-year TIPS yield. The 10-year TIPS yield. If you don't have it, you can go check it out, right? You can find it right, I think, right there. Its symbol is DF 1-1. Let's check this out. Let's see if we have it here. Should be here. Treasury securities at a 10-year constant maturity. Right. Now, why is this very important? Why is this very, very important, ladies and gentlemen? Let's look at why it's very important. Because if you're looking at this chart, right, and then you quickly go and check out the gold chart, for example, this is the part of correlation that I keep mentioning when it comes to the macros. What you want to do is understand that most retail traders who trade gold do not even know what actually drives it. Most of them are thinking that gold is a fear asset. That, you know, when during times of chaos, they gotta buy, right? Buy when scared, and, you know. But that is the conventional wisdom, and it explains about 40% of gold's behavior. The other 60%, the part that produces the sustained multi-year trends, is driven by something most traders have never once looked at, right? We're looking at real yields. Real yields, especially now that the FOMC report came out. How does that affect real yields? We're looking at the nominal rate minus inflation. So, gold moves in the opposite direction, almost perfectly, almost always. See? Let's open the weekly. Right? We are currently hovering around 4,500. And then you open this. All right, we're kind of starting to flatten right here. Okay. Starting to flatten. All right. Nevertheless, right? So, when real yields rise, we see that bonds outcompete gold on yield. That is very important. Capital starts to flow out. Every major gold bull and bear market in 50 years is explained by that relationship. Simple as that. All right. And you can definitely, let's see, you can actually get it right here. All you got to do is, there you have it. There's this website as well, the Federal Reserve Bank of St. Louis. You can also go check it out. It has some really good charts there, right? Very, very extremely important charts that I highly recommend all of you to go check it out, right? You could look for the 10-year TEEPS as well, okay? 10-year TEEPS, market yield, same data, right? Same data. So we are right on track. Now, that is the relationship between gold, right, and yields. Real nominal rate minus inflation. So that is with gold, okay? So once you apply that, all right, you want to overlay it with your gold chart. You will never again wonder why gold is moving in a particular way. So once again, 60% will fundamentally be correlated to these comparisons. All right. Something else traders don't know. Let's see. The spread speaks before any candle. Now, your trading platform, it doesn't matter what trading platform you are using. All right. Say you are using this wonderful broker, right? And you are trading gold. Okay, you're trading gold. Unfortunately, for those of you that are on binary, you might not be able to see this, but the bid-ask spread, right? Let's get a good example here. So we got this. Usually we see this right here, right? Should be around here. So the bid-ask spread, every trader who has ever placed any trade, you are paying. You're paying for some kind of markup. You're paying for some kind of commission, right? It is just the first cost you enter to enter the market. And almost nobody is using this information. You see, The spread is the market maker's live assessment of how much uncertainty exists in this instrument at the specific time. Now, if you go and check out, compare brokers, you'll start to see that some brokers have higher spreads and they usually compete for the tightest spreads. So, spread compressing as price approaches at key levels, right? You can start to understand that large resting institutional orders are sitting there. So you can use spread and this bid-ask spread as a fingerprint of positioning. You never want to enter any moves when the spread is very wide, especially during quiet sessions. Like we're talking about New York evening, right? Asian Open and things like that. Watch the spread in the 5 minutes. In 5 minutes, open your 5 minute and check out the spread. All right. You want to calculate the spread here. Now it will depend on the broker, but you have to keep those two intact. That can give you another confirmation, especially when you are starting to come to some levels, right? Some of these levels, these will be like confirmations for you. All right. So let's say you come into this high right there, right? So this area here, you gotta understand that you have to start to go very slow. You have to watch everything right there. When price starts to tap into this zone here, you want to look for the spread as well, the ask bid. And there are lots of strategies for that we'll talk later on, right? Okay. Next thing is I want to talk about your emotions, ladies and gentlemen. Emotions, I can keep stating this. Emotions are, if not very, very complex, and this is solely on a personality subjective level, right? The most common belief in retail trading is that the market is working against you. It is not, ladies and gentlemen, right? The market is not working against you. Stop thinking like that. It isn't, right? It isn't. The market is just indifferent. It doesn't care who you are. It has no awareness of your position. What is targeting your stop in the market structure just is the need for liquidity, right? If you decided to buy here and get out here and price never reaches there, right? Do not think it's the market. Start to look into the why. Start to investigate what is happening here, right? What is the architecture, the financial architecture? Where are you? Is it your broker? Is it the institutions? Is it tier 1 banks? Is it there's an entire hierarchy that you want to keep into play, and then you can investigate every level. We talk a lot about this, okay? So please, ladies and gentlemen, the market does not take your money. It's your emotional response to the market that's taking your money. Fear closes the trade early. We talk about that. How? Because you start to hope, right? Once fear comes in, you are basically a victim, right? Of whatever you want to believe in. And then you start to believe that positions will surpass your initial plan. And then you end up hopping and losing the position. You start getting greedy, sizes up all the time, right? You're sizing, you're doubling your risk, your revenge trading, you're re-entering after a loss, you're bored, you're taking setups because you haven't traded in 2-3 days and you think that is fine, it's okay to be patient. See, each of those is a decision made by your emotional brain overriding a decision already made by your rational brain. The market charges you the full cost of every emotional override, every time. So guys, before every session, okay? Trying to rush through this, right? Before every session, okay? Take it very easy, guys. Take it slow. Name and state. One word, flood, right? How are you feeling? We've done this assessment before. Are you feeling flat? Are you confident? Are you recovering? Are you bored? And basing on that, you have a system. You're not going to enter. You have some criteria. You have some principles. You're not just going to enter the market because you feel a certain way, or you just got your paycheck and you want to go all in, right? Doesn't work like that. Your emotional state is the primary risk factor in that session, not the market, not the setup. It's just you. Okay, let's move on to what I like to call and consider compliance. Process compliance, just like the institutions are doing. Right? What is your win rate? What is your score? What do you grade yourself? I have a great tester for you guys. Go check it out. Get used to these boring questions. Get used to them. Because that is what's going to save you long term. If you're looking to be here the next 5, 10, 15, 20 years, and even after retirement, then you got to start asking these questions. Most retail traders are measuring success by their win rate. And this is the wrong measurement, right? A trade that won because you deviated from the process validates your luck, not the process. So, and the opposite is true. Luck accumulated over time. It looks and feels exactly like skill right up until it stops. So, it becomes very expensive long term. All right? So what are the institutional traders doing? They measure process by compliance. We have a compliance check, a full checklist, right? Did we follow the defined risk parameters? Did we exit at the right area? Have you checked the macros? All that kind of stuff. A trade that lost but was executed with a full process compliance is a success. So, the system that is working as designed is not meant to be dropped. You have to keep tweaking it until you get it right. All right? A trade, say that one with zero process compliance is a failure. It is a failure not because you made some P&L or anything like that. It's not a failure, right? It's a failure because you are reinforcing a bad habit, right? And you will repeat this behavior and the market will eventually take all of that back, plus some interest. So every Friday, every evening, when you're done with the week, I want you to score yourself for every trade. That is why I have a free chart here, right? This is a journal for you guys. Where is it? It's over here. Go check it out. You know, you can include your instrument, right? Your direction, your entry date, your exit date, your stop loss. I like to call this R, risk, right? Your result, was it win, loss, break even, your gain? Make a screenshot, share it. After screenshot, calculate your strike rate. This is how you're supposed to handle your trading. The institutional trader always does this compliance, right? Ladies and gentlemen. So, ensure you're doing that. And one thing I want to talk about as we conclude is the human psychology. I mentioned this so many times. It is very important how you think. The one thing traders who lost have in common is a hidden psychology. You know, I've been in this space for a very long time. Very long time. All right? And I've seen all kinds of people come and go. I've watched so many traders, students. Some succeed in the first couple of months, weeks. You know, it's just probability. But I'll tell you, most don't. Across all the ones who are still here, who have really built something real, and I'm not talking about the institutional ones, right? The ex-institution, because that is a different type of trader. I'm talking about retails that are not running around and showing off their lifestyle and selling courses and things like that. Like real traders who are making P&L consistently, right? They have built something very, very strong mentally. Their consistence, right, is way, way, way above this world. They're not so intelligent. It's not the capital they come in. Some even came with nothing. It's not even the strategy. It's not the discipline, right? It's not all that. The traders who last treat each week as a unit of learning. Every week is broken down. Every single week. And they record that. Baby steps. And they can look back and see their journey. Every week is a unit of profit for a typical retail. But for them, it's simply a learning week. They look at it as a unit of learning. So they're not asking, how much did I make this week? They're asking, what did I learn this week that matters and makes me a better trader than I was last week? They're always journaling. They're always reviewing all the time. They're reviewing. They're reviewing their back testing, right? All that kind of stuff. And that is very, very important, right? They find the specific they name a thing that did not go according to the process, and they fix one thing, not 5. One week after week, 1% better, then 52%, and then keeps climbing and climbing. And next thing you know, they are ahead of the curve. So it's a patience game. It takes a lot of work. It takes a lot of effort. Sometimes it takes years. It takes a lot of time of consistency. And I know that is not exciting. It's boring. That will not get 50,000 views. I get it. You could go check out some of these videos. But it is the only thing that actually works. And I'm telling you guys today because the version of trading education that fills most of the YouTube channels does not want you to know that. Because the thing is, if you genuinely accept that this is a 5-year craft, okay, a 5-year craft to build a very massive historical track record, right? 5 years. Some of you go to school for 10 years. Doctors, we're looking at professions that take a lot of your time. And during the process, you're not earning anything. So you got to detach yourself from the materialistic side. All right? So that is it. If you know all that, if you genuinely accept, and you stop jumping from course to course, and you start paying more attention to your internal dynamic, your psychological level, and how you're approaching this, because this is something you're doing with energy, with currency, and it affects your daily life. So you'll stop paying for random signals, you'll stop looking for a secret, and you'll start doing the work. All right? Ladies and gentlemen, I've gone through a summary of 10 things. Of course, we'll break this down. It's a lot. It's just a summary of what I think, right? 10 things that most retail traders, including experienced ones, might know but do not know. And it's not a secret. It's just because someone like me is coming out and exposing all this, right? Please go check out the link in the bio, right? We've come to the end of the week. Super excited. I've broken down live trades, showing you guys how to integrate institutional side with typical retail. So I'd really like it if you subscribe and check out the other videos. Learn, encourage other people to join, be very proactive. Let us make this community grow. Thank you all and stay safe.
Getting silly at the function. 2 pints of beer and my brain can't function. Drive fast, don't stop at the junction. It's P, I don't need introduction. Yo, they already know what I'm on. Won't slow down, but I just carry on. I make tunes for the gal and tunes for the dons. We make it pop off every single time that we're on. We make it bang like shotgun. Bottles on tap, let me pop one. We make it bang like shotgun. And if you want lyrics, I got some. We make it bang like shotgun. Bottles on tap, let me pop one. We make it bang like shotgun. And if you want lyrics, I got some. We make it bang like shotgun. Bottles on tap, let me pop one. We make